Mood of the market is always one of the most important things to divine because that's what shapes short-term trends and even long-term ones. Let's look at John Templeton's famous quote about bull markets being born on pessimism, maturing on skepticism, growing on optimism and dying on euphoria. Which of those moods can we see right now? There's enough of all four to keep everybody interested. Pessimism, retail investor participation is very low, small caps in the UK and Europe are very depressed. Euphoria, you've got gold-plated golf club manufacturers floating on the Hong Kong stock market, and Snap talking about floating with a $25 billion valuation when it loses money. So you sort of pays your money, you take your choice. For me, I think complacency is probably the defining mood right now. Volatility is low, markets seem comfortable with the fact that either central banks or governments have got their back. That's one of the biggest risks against which we all need to guard right now. I think the implications of the market mood are obviously very important. Ultimately, what the market's thinking drives valuation, and it's valuation that ultimately determines your return from any investment that you make. So the fact that we're swinging from optimism and euphoria on one side to pessimism on the other, I think if there has been euphoria, bond market earlier on this year, people buying Italian 50-year bonds was probably a bit of an oversight. Equally on the pessimism side, UK small caps, UK cyclicals look very, very depressed. It's a matter of picking your fund manager, picking the asset class that works for the client and navigating your way around that. Overall, I think the fact that complacency for me is the dominant theme. Overall, equity valuations are relatively elevated. That's merited by the growth, by the earnings that have been generated, but to sustain that, earnings have to stay where they are or get higher, and in the current economic environment, that could be a challenge. Changes to the market mood, well, if I had a crystal ball, I promise I'd absolutely share it with you all. Clearly, we probably have to be more aware of political risk than we've been for a while. I've been looking at the markets for 25 years, and most politicians have been gathered in the sort of middle ground mush, neoliberal policies, pro-market policies. That seems to be changing a little bit. We've seen it a little bit with the Brexit vote. We've seen it with President-elect Trump. So there are big things that could change sentiment, which are the Dutch elections, the French elections, and the German elections next year. And after that, central bank policy will continue to have a big role. If the Fed really jacks up interest rates, that will be a big game changer. I personally think they'll go very, very gently. But at the moment, with bond yields rising and the dollar rising, liquidity is being tightened anywhere, whether the Fed moves or not. I think those are the big trends to watch.